Hey, welcome back. It's Jason Walter here, and here's your latest housing market update. I'm laughing because it took me 15 times to say that. In any case, it's Monday. So with that said, I want to talk in today's video regarding the second quarter earnings call for Redfin. They actually had a transcript that was actually published last week on the 4th, and they talk a lot about our housing market right now, their business results or the results from their business for the second quarter, and what has transpired in their housing market. They also provide some insights regarding what's ahead. So I thought it was really interesting to read this earnings call transcript that was actually conducted by the CEO of Redfin as well as the CFO of Redfin. So with that said, let's begin today's video. And of course, if you guys enjoy this video, then please hit the like button. I greatly appreciate that. Also, consider subscribing as well. I post frequent housing market updates so you guys can be more informed. They started this earnings call with the CEO of Redfin, Glenn Kelman. He stated here that basically Redfin actually fell short of expectations regarding revenue. Revenue was $607 million in the second quarter, but the projection was for $613 million to $650 million. And he stated here that this shortfall in revenue from Redfin was due to the largest rate hike in 35 years. Nonetheless, their net income was in line with their expectations, but their EBITDA, which is their earnings before interest, taxes, depreciation, and amortization, was at $29 million. So their loss was $29 million for the year. And also, I found it to be very interesting because as I reported to you guys back in June, they laid off approximately 6% of their workforce at Redfin, and that's going to cost them $10 million in restructuring costs. And he goes on to say the following in this report here. It says, in 5 years as a public company, Redfin has never fallen short of our revenue projections. Again, the revenue was $607 million, but they projected for income to be at $613 to $650 million. And that's one reason why they had a loss of $29 million for the quarter. He also talks about Redfin's website covering about 94% of the houses in America, and that's up from 91%. He also mentioned they hired too many agents too quickly during this pandemic as well. And that's obviously probably one reason why they had to lay off agents back in June, because they hired so many agents during the onset of this pandemic where home buying demand was very, very strong. But of course, now because home buying demand is decreasing, they're laying off agents. Here's something I also found to be very interesting. I actually was not even aware of this. But if you guys are not familiar with Redfin, if you hire a Redfin agent to help you buy a house, typically they give you a refund in order to use a Redfin agent. So a closing cost credit, for example. And that's basically the model that Redfin has been doing for several years. If you use our agents, we give you a refund. That's basically been their model for many years here. But on July 26th, they actually eliminated this refund in 22 markets with few objections. If this pilot continues to be successful, though, they will get rid of this refund entirely as early as January 2023, which of course would improve their gross margins. I found this to be kind of eye-opening because Redfin has been using this model for many years. If you use our agents, we'll give you a refund. But they're stating here that they actually eliminated this in 22 markets, and also by January 2023, it'll be entirely out of their business model. In my personal opinion, this refund they give homebuyers if you use their agents has been their competitive advantage for several years now. But they're basically calling for this to be eliminated by January 2023, which is very interesting. And he goes on to say the following in this earnings call here. They basically talk about housing affordability and that pressure that was actually mounting in February. And therefore, at that time, more people were searching on Google for rental homes versus houses for sale. And because they saw this shift in people looking for rentals versus houses to buy, traffic actually slowed to their website of redfin.com. And also traffic also slowed on their mobile app as well, from 11% year over year in the first quarter down to a 9% in the second quarter. And it says here, over time, Redfin expects to compete better for renters and not just buyers. He also provides some insight regarding their iBuying program, which is called Redfin Now. So for the second quarter, they actually earned $6.8 million in gross profit, keyword gross, up from $5 million in the second quarter of last year. But because of a sharp decline in home buying demand, we now expect to sell the houses we agreed to buy in April and May of this year for a loss after accounting for holding costs, selling costs, and repairs. And he says here their forecast actually assumes that home prices are going to continue to decrease moderately through the rest of 2022. He also provides some very valuable information regarding the houses they have purchased and also the houses they have under contract right now. He says, we are not worried about the houses we agreed to buy in June and July because we haven't bought as many or paid as much for those houses. Also in April and May, or for the houses they purchased in April and May, their offer amounts were based on the assumption that home prices would hold steady over the next 4 months. And by the way, this 4-month time period is the typical time it takes to clear out the original owner of the house, get the home on the market, and also to get the new owner under contract. So in other words, it takes Redfin approximately 4 months to when they buy a house under their iBuying program here to when they ultimately get a new offer accepted on that house. But check this out, for houses they have under contract in June and July of this year, they assumed that home prices would decline over 6% over that time frame. So what Redfin is forecasting here is for home prices to decrease 6% in the next 4 months from June and July of this year. Glenn also mentions they're selling houses much more quickly than they're purchasing them right now. So for example, in July, they actually put more than 4 houses under contract for every 1 house they plan to buy. And their inventory of houses they actually own under this iBuying program here is set to peak early next week at $436 million in houses owned. But they also expect that all these houses they owned will be fully off their books by year end. He also talks about their plan to have their first annual net income by 2024, because of course they've been having net losses year over year here. He also talks about the housing market as well here, because he says it got a lot worse in June, but then improved in July. He also talks about the breaking point coming for home buyers on June 10th. That was when mortgage rates spiked 30 basis points that day and then climbed another 43 basis points to 6.28% the following Monday and Tuesday, the biggest one-week jump since 1987. He also mentions, of course, that pending home sales dropped 20% from June 2021 to June 2022. And also we had a whopping 9% drop in pending home sales month over month as well, which is pretty eye-opening as well as I report to you guys. He also talks about existing home sales, and that may dip below an annualized rate of 5 million units in 2022, and we haven't seen that since 2014. So for example, this would be quite the turnaround, because in 2021, according to the National Association of Realtors, we had 6.1 million houses that sold in the United States. We also had more than 5.3 million in 2019 and 2020 as well. He also talks about the share of price reductions has basically doubled from June 2021 until June 2022. It went from 9% in 2021 to 18% in 2022. And this is a trend here they actually expect to accelerate when they actually report July's numbers. They also stated in markets like Denver and also in Boise, Idaho, for example, more than half of listings have price reductions. In Boise, that number's 62%. He also mentions that home price growth has slowed greatly. So from March to mid-June of this year, year-over-year price growth slowed to 16% on an annualized basis, now down to 9%. And because home buying demand has been decreasing greatly, that's why we're seeing this home price growth slow greatly as well. He also states here that beautiful homes on corner lots still sell very readily here, but houses with funky layouts don't sell at all. And home builders have been pivoting greatly as well due to this pullback in home buying demand. They have been funding lower mortgage rates, paying closing costs, doubling agent commissions, buying washers and dryers, and upgrading kitchen finishes, for example. He also talks about this increase of housing supply we have right now, and this is due in part to iBuyers, builders, and other institutions selling their houses right now. So the fraction of inventory on the market right now actually increased from 27% in 2017 to now 35% in 2022. He also discusses iBuyers and also home builders reacting to this shift in our housing market very quickly as well. Because he states here that iBuyers are pricing their houses actually below current comparables. And also if they don't get an offer accepted after the opening weekend, they're lowering their prices as well. He then turns it over to their CFO, who's Chris Nielsen. He talks a lot about revenue for all their businesses that Redfin owns, but take a look at this. He then talks about their net loss by their businesses. So their total net loss for real estate services was $18.8 million, down from the net income of $7.8 million in the prior year. Also, their iBuying program, which is called Properties here, had a net loss of $3.2 million, down from $1.4 million in the prior year. Also, their total net loss for rentals was $9.2 million in the quarter. That's actually down from the net loss of $14.1 million in the prior year. They also had a net loss for mortgage at $6.5 million, and they also acquired Bay Equity, a mortgage lender, on April 1st of this year. On top of that, their total net loss as a company as a whole was $78 million for the quarter, and that's actually below their low-end projections of $72 million to $60 million in their guidance. Now, this net loss of $78 million does not include a $10.3 million of restructuring expenses for their June layoff. Meanwhile, Redfin stock is up a staggering 43% over the past 5 days alone, but over the last 6 months, down 61%. Year to date, down almost 70%. And take a look at this. Over the last 1 year, down almost 80% in one single year. And over the past 5 years, down 51.35%. So comment below your biggest takeaways from today's video. Also, if you guys got any value of today's video whatsoever, then please hit the like button and greatly appreciate that. Hope you guys have an awesome day. Look forward to seeing you on the next video.